How did Mario Draghi's "whatever it takes" speech impact the ECB? Imagine a moment when confidence in the euro was hanging by a thread. That was July 2012, when Mario Draghi, the president of the European Central Bank, made a speech that changed everything. His words, "whatever it takes," sent a powerful message to financial markets and governments across Europe. The Eurozone was facing a serious crisis, with countries like Greece, Italy, and Spain struggling to keep their economies afloat. Investors were worried about default and the stability of the euro itself. Draghi's promise was simple but bold. The ECB would do whatever it takes within its mandate to preserve the euro. This statement instantly reassured markets that the central bank was ready to act. It meant they would support banks, governments, and markets with unlimited support if necessary. This helped stabilize the euro and lowered borrowing costs for countries under financial stress. For example, Italy's 10-year government bond yield fell from about 6.5% to around 3.3% over the following years. That was a big relief for Italy's economy and its ability to borrow money. This speech also marked a shift in how the ECB handled the crisis. It led to the launch of new, unconventional tools like the Outright Monetary Transactions Program. This allowed the ECB to buy government bonds in the secondary market without a fixed limit, helping to keep sovereign debt markets stable. It was a major step beyond just setting interest rates and showed the ECB was willing to act more aggressively to control inflation and support economic growth. The impact extended to banks too. By backing the markets, the ECB reduced risk premiums and made banks less cautious about lending. This meant more credit was available for businesses and households, which helped boost economic activity. When banks can lend more easily, it encourages spending and investment, which are key to controlling inflation and avoiding deflation. Thanks to Draghi's words, the ECB was able to help calm the storm during a very turbulent time. It played a vital role in preventing a complete collapse of the euro and kept inflation from falling too low. The promise also helped ease fiscal pressures on governments by lowering their borrowing costs, giving them more room to maneuver financially. Over the years, the policies inspired by this speech helped the Eurozone recover from multiple crises. The ECB kept its focus on maintaining price stability and supporting economic growth. Recently, it has shifted gears again, ending some of the ultra-loose policies and raising interest rates to fight rising inflation. But the impact of that speech still echoes today. In short, Mario Draghi's "whatever it takes" speech was a turning point. It stabilized markets, enabled new tools for crisis management, improved bank lending, and helped keep inflation in check. It showed how a clear, strong message from a central bank can restore confidence and shape the future of an entire economic region.